In this video, I'm going to show you how to read the candlesticks to help with the New York Open strategy. By reading the candlesticks, you can decide the pressure of upside or downside and then trade accordingly. When talking about the candlesticks, you can find a lot of fancy names online like a doji, hammer, shooting star, or engulfing, etc. But I can tell you that you should not trade on this because they're meaningless to a professional trader. For example, in engulfing pattern, people will tell you that this is a reversing pattern, so when you see this, you can trade the opposite direction, but that is totally wrong. Candlesticks are only meaningful combining with the context. Without the context, talking about the candlesticks or trading only on the candlesticks, you will lose money for sure. But why are these names were there in the first place? Because in the old days, the trading is relatively simple, so people can still leverage some of the pattern to do the trading and then make successful trade. However, as the market develops, especially with the computer science development, there's no way right now at the moment. Let me use this example to show you how to read the candlesticks to assist your trading. Basically, after the New York Open, you can see there are two consecutive bear bars going to the downside. So this is a possible breakout to the downside. You want to wait for the small pullback and then trade down. However, the next bar is a big bull bar here. It reversed a lot. So in this case, you may think, okay, it is not a simple breakout, but rather it's a break of the value zone or range and then going to the downside for retest the bottom of the range. That's the next New York Open strategy you want to think about. Then this is what happened next. You can see that it's breaking to the downside strongly and then pull back. So this bar can serve as the signal bar. If you trade normally, you can see the market goes down and then you can make a profit. Then this is the New York Open break and the retest strategy. However, you may think, here we have the leg going down. This leg is very big. Is there any way that we can capture this breakout leg? Because it's a waste of the trading opportunity here, right? Yes, I can tell you that by reading the candlesticks only, you can find the trading opportunities around this pullback here. First, what you can see is these two bars going down are very strong. That is the downside pressure for two consecutive bear bars. Next, you can notice that this bull bar here doesn't have any follow-up. Only one bull bar here. That means the upside pressure is weakening. Next, what you can see is that these two doji bars here with the tail at the top, that means the resistance, and the tail at the top is larger than the tail at the bottom. So this means the downside pressure. Another way to read this chart is that here the market has a small value zone here because it lingers there for a while. And then these two doji bar, basically they're trying to get back into the small value zone but failed with a tail at the top. This means the downside pressure as well. Another way to look at this two doji bar is that basically this is an outside bar. If there's an outside bar and then the direction is the same as the main trending pressure here, that means after the outside bar, the pressure will continue. This also increases the downside pressure as well. Take a look at the first 6 bars here. We have bear bar, bull bar, bear bar, and the bear bar. So basically 5 out of the first 6 bars are bear bars, which means the downside pressure accumulating. Sometimes simple counting of number of bars, either bull bars or bear bars, can give you another hint for the direction of the trend. Given all the above analysis, so basically you can see that around this area, especially after this doji bar finishes or even this trend bar finishes, the probability to the downside is larger than the upside. So this is how you can enter your market after you see these two bars and then trade and capture this big leg here.